All right, welcome to Talkin Investing. I am Tom, and as always, this is not financial advice. Today, I want to talk about Hut 8 Bitcoin mining, stock ticker HUT. Hut's a Bitcoin mining company, and they also have a high-performance computing data center. So I want to go through both of those things, and what I really want to talk about is how Hut's stock has been holding up versus its peers. Hut appears to be winning this year in 2022. Now, obviously, all of the Bitcoin mining stocks are down dramatically, but I'm going to go through some numbers and show you that it looks to me like Hut's strategy has paid off big time for them so far this year. So I'm going to tell you why I think that is and what's going to happen going forward. So if you're new to the channel, please remember to subscribe and hit the notification bell. Also, if everybody could please smash the like button, I appreciate it. It helps the channel a lot. Lastly, you can join the channel and become a member just by hitting the join button on the YouTube page. With that, you get some extra members-only content, and we also do a members-only live stream once a week every Tuesday afternoon, so we'd love to have you there. Okay, let's talk about Hut 8. I think they stand out as a company that picked the right strategy, and they very quietly have been doing a good job this year. Okay, let's start by looking at where their stock price is. So they closed Friday at $1.94. That leaves them at a $377 million market cap. First thing I'm going to do is compare that to their historical market cap, because you're going to see all the Bitcoin miners have had a very bad 2022. But what I think I'm going to show you in this video is Hut has fared better than almost all the rest of them, and there's some specific reasons for that. So like all the other Bitcoin miners, Hut peaked in November of 2021. That is when Bitcoin peaked and hit its all-time high at around $69,000. So Hut was over a $2 billion market cap company at that time. By the time June of 2022 rolled around, Bitcoin had hit a new low for the last 2 years, and it flash crashed down to around 17,500. So at that time, Hut's stock was down to about a $250 million market cap. So you'll see they're way off of their highs, but they're also way off of their lows. You know, they're at $348 million right now, and that's up from 250, so almost $100 million of market cap up off of their bottom. A lot of Bitcoin miners right now are actually beneath the bottom that they hit in June. So we'll look at a chart specifically as to how they compare with all of their peers in that regard. Let's quickly revisit their September operational update. Okay, production highlights. 277 Bitcoin were generated, resulting in an average production rate of approximately 9.2 Bitcoin per day. You're going to see that is down from August. Hut additionally was down because they did have 10,000 GPUs mining Ethereum. They were being paid in Bitcoin, but they were mining Ethereum. Very early this year, almost a year ago now, Hut 8 bought a high-performance computing center. So those 10,000 high-end GPUs from NVIDIA moved nicely over to that computing center. So they've already paid for themselves, and they do have a seamless route to getting them into their high-performance computing centers. So this was a very strategic plan by them, and that's what I want to focus on the most. Hut really, I think, was the first one, not so much in words, but in actions. They were the first ones to really call this bear market or crypto winter, whatever you want to call it. And they made some dramatic shifts near the end of 2021 and into 2022 that I think are the reason their stock is outperforming all the rest of the Bitcoin mining stocks except for one. Okay, keeping with our long-standing HODL strategy, 100% of the self-mined Bitcoin in September were deposited into custody. So I'm going to show you a chart in a few minutes as to why that is critical, and I think that is one of the main reasons. There are several reasons, but that is one big reason why this company has held on so strong. They are still hodling all of the Bitcoin that they mine. They've been doing that for 2 years. So total Bitcoin balance held in reserve as of September 30th, 8,388. Installed ASIC hash rate capacity was 3.07 exahash. So they have moved very slowly. A lot of their peers have increased their exahash rate a lot more than Hut has in the year 2022. But again, this, in my opinion, goes back to the fact that very quietly, they internally were calling for a crypto bear market or crypto winter at least a year ago, and they started to shift their policies accordingly. They have spent really no new money in the year 2022 on buying Bitcoin mining machines. So they had a lot of them purchase ordered, so they will increase their Bitcoin exahash rate by about 75% in the year 2022, leaving them with a very healthy balance sheet. All the Bitcoin mining companies are operating at a loss. Now, that is not a loss from a gross margin standpoint, many of the Bitcoin mining companies are still making gross profit even at Bitcoin 19 or 20,000. But as we've seen this year, Hut's energy costs have gone up. They use a lot of natural gas. This was a tough year for natural gas. So they have acted accordingly, and they've mitigated that increase in cost by mitigating the amount of their production. But in the meantime, they have not been sitting idly. They did buy an entire new business that is a complementary business to them, and that is the high performance computing center. So we're going to look at the revenue that generates and the gross profit that generates, and that is providing cash to pay for operations in the meantime as they go through this crypto winter. Not only is the price of Bitcoin down, the price of energy is up, the hash rate on the overall global network is way up, the difficulty level is going up. So this is a pretty good time to be in a holding pattern, not expanding. It leaves them with a healthy balance sheet poised to potentially do some organic or potentially inorganic growth in buying some of these other companies that are struggling and are out of money and may not make it through what is the rest of however long this bear market continues. So their Bitcoin remains totally 100% unencumbered. Another thing that I think is bringing value to their stock. Okay, this is from their investor presentation that they just put out at the beginning of August. This is one page, successfully navigating the bear market. Conservative approach to capitalization, modest use of debt, unencumbered digital asset inventory, aligning capital commitments with capital availability, moderated CapEx investment in late 2021, balance of CapEx commitments are fully funded. So in other words, they're going to get to 3.5 exahash. That's all fully funded already. So, okay, then they say entered HPC high performance computing space via an approximately $30 million acquisition. That's Canadian dollars. At the market is currently the most flexible, cost-effective tool. So as needed, they're using their at the market program. They don't use this a lot, but right now they have decided, first of all, debt has dried up. So there's really no debt. They don't want to encumber their Bitcoin by pledging their Bitcoin as collateral against debt. And they really don't want to take debt because it's the companies that took on a lot of debt that are in the biggest jeopardy of going out of business right now. So by keeping their debt very low, using the gross profit that they have from their high computing data center, as well as their at-the-market offering as needed, they have managed to keep one of the strongest balance sheets in the Bitcoin mining industry. Okay, so very quickly, let's take a look at that balance sheet. $254 million of current assets, $24 million of current liabilities. That's almost an 11-to-1 current ratio. That is extremely strong. This is why investors are confident in parking their money here. This is not a company that is on the list of companies in danger of having a liquidity problem or going out of business. Total assets of $572 million versus total liabilities of $63 million. So, that's just under 10-to-1 total assets to total liabilities. So again, super healthy balance sheet. Let's look at some of the numbers. I want to analyze Hut versus the rest of their competition and just show you why I think they are currently winning right now. This is the change in company stock from their lows in June to their current price that they closed at on Friday, October 21st. The vast majority of the Bitcoin mining companies are setting new all-time lows and are not performing well at all. You can see I have 3 companies in green. There's really only 3 companies that have performed or outperformed Bitcoin itself. Bitcoin's at 9%. Yes, Hive is at 11%, so that's about the same. Riot has held on to 45% of its gains from summer lows. Hut has held on to 53% of its gains from summer lows, so that is second place among all Bitcoin miners. And then Marathon's held on to 125% of its gains from summer lows. So these 3 companies have clearly stood out. You'll see they are in green. Hut was actually in 9th place in September with 277 Bitcoin mined. So there were 8 other companies mining more Bitcoin than them. They are in 3rd place overall in market cap. So they have maintained their market cap better than most of these companies. For instance, Core Scientific is number 1 on this list by far. Hut 8 actually has a larger market cap than Core Scientific. They have a larger market cap than Bitfarms, which is number 2. They have a larger market cap than CleanSpark, which is number 3. And they have a larger market cap than Hive, which is number 4. So Hut has a larger market cap than the top 4 Bitcoin mining companies from a production standpoint in the month of September. And there's a reason for that. This is the top 10 companies' hodl position. So this is Bitcoin on their balance sheet. So we talked a little bit about this. You'll see Marathon has 10,670 Bitcoin, but somewhere just under 5,000 of those they purchased about a year and a half ago. So So, they're a little over half self-mined. HUT has 8,388 Bitcoin. That is 100% self-mined. In third place is Riot with 6,775. They are now taking a hybrid, so they're holding some and selling some. So HUT is really the only pure play anymore on hodling 100% of their Bitcoin. So you can see the drop-off from that is gigantic. To fourth place, you're at 3,350 Bitcoin. This is HUT's powerful number, and this is a decision that they made, and the market seems to be rewarding them for this. So again, if we go back to this chart, you'll see there's three of these in green. We visited this chart already. These three companies, Marathon, HUT, and Riot, those are the three companies with the largest Bitcoin hodl position on their balance sheet. So I think that is no coincidence. The market is rewarding them for the conservative strategy they've taken, for holding their Bitcoin, for having a strong balance sheet, for having massive liquidity. I think when we see HUT make their first move, that is, to me, going to be one of the first indicators that Bitcoin's bottomed out, that the bear market is at or near its end, and that HUT thinks we'll be moving into a better market. So they've played this right all the way along so far, so that's no guarantee that they'll play it right in the future, but I do trust their management. They've been making excellent decisions all year this year. So again, this is not financial advice. I'm not advising you to buy this stock or sell this stock. I just want to give you the information and show you guys where HUT is at, because their stock has held on despite being down drastically. Their stock has held on very strong, and they have definitely been one of the winners out of the Bitcoin miners in the year 2022. Okay, so I don't want to waste a lot of time looking at their stock chart. We know that they're way down from their all-time highs, as are all the Bitcoin miners. However, we do see that they've held on to some of their gains from this summer better than the rest of the Bitcoin miners. So here's that 50+% they are off of their summer lows from June. Now remember, the majority of the Bitcoin mining companies are actually lower than their June lows. So HUT is more than 50% above their June lows. Even having said that, HUT could still go up 90% just to get back to their highs from August, which was 2 months ago. Now, Bitcoin had a little relief rally in August. It got up to $25,000. Bitcoin's been hanging around between $19,000 and $20,000 pretty much ever since. So if there's any relief rally at all, if we see a run up to $25,000 for Bitcoin, this is close to a double in their stock price potentially. So obviously the other side of this is they're still over 50% off of their summer lows. So if the pain continues and Bitcoin goes lower, there is still room to the downside for HUT, even just to get back to where they were this summer. So that's kind of the risk reward to do on this. You guys got to do your own due diligence, and obviously you only know your own risk tolerance. So that's my update on HUT. Thanks so much for watching, and I will see you guys in the next video. If you made it this far, please remember to subscribe to the channel and smash the like button. Thanks again. We'll see you in the next video.